Euro USD update. Hi, it's the Market Sniper. Here's your charts, and here we are. That was a key lid area on that low period when many of us thought there might be a run for parity. We broke above that, we left shouldered, we created a head. We called that big reversal on the dollar. Was a good shout, not always accurate, but on that one came down, we got a right shoulder. And this is where it got interesting. So drilling down, we got the inverted HVF from HVF theory, and you can learn a whole bunch more about that on one of our programs. Here's the downside. There's the target that was made. That was the interim stall where you got a bit of a rally, and that was the final target where you got a bit of a rally on the right shoulder. And this was a great breakout. You could have been short in the primer right up top there at 116. In fact, we were anticipating that and got short after the rising wedge, that structure that came here, which I'll just draw quickly for you, and that trade is still on. Yeah, so the money's really made in the sitting, and things don't go straight in your favor the full time all the time. On other shorter time frame platforms that I have also traded the euro short, we took target off at the target of the inverted HVF, which, if you look at it in hindsight, was a very good point. You can see it spilled really nicely from there, triggered the traditional entry, went in. Let's have a look at this. Let's keep dropping the time frame, dropping to the 2 hourly. So now you can see this. We got an inverted structure here, big rally back in. So we call that the triggering event, and then the feign back. So that was the break and feign. Then it wound up quite convex. Let's drop the time frame again. It was quite a convex setup. You'll learn about what we mean by that. That was your setup just on the inside of that triggering level, proving again that it was a key level of significance. You had a little upside wind up. I remember that pop to give you that rally. Convexity, rollover, target down here. You triggered back. This time it was for real. Break, very small rally at the second interim of this setup. Spill through target, down through the key levels of 115, major key level that is, 115. You remember that blue line I showed you on the bigger time frame when you had the parity period, when it was in 106s up to 115. This was your ceiling. You broke back into that ground floor, down, right shoulder on a rising wedge that spilled and took you all the way to target on the spill. Up, rising wedge up to the neckline. You got a small shoulder there, smaller shoulder. Let's drop it down one more time. We're going into the present, the more recent present. You got your right shoulder there in the rising wedge. You spent your time in the top floor of the wedge. You popped out, you fizzled, you had a little bit of a pullback. That's called the return move. The return move to the neckline, that return move to the neckline took place, convex, supported strongly, rejected after running it. That right shoulder, that was the touch there, not invalidated on the inverted head and shoulders. This is your inverted head and shoulder target. You could have got in here yesterday and you would have traded all the way long up to a 115 and 38 target from a 113.9s. That target now made, churn at the target. I did take off on one of my platforms with regards to that. I was a bit aggressive with wanting to get back in. I wanted it to come all the way to 71. I went beyond the target and I was looking at some of the key points here. Note how this resisting very close to that low. So I was asking for a bit much there after getting out down there. I didn't elect to trade it long. Why? Because it's against the major counter trend. Don't try take every move necessarily in every direction, but we drew it, we forecast it, and the target was made. What are we getting now? You could get a wind up and a return move, and I may get my wish of the fill. One of the reasons I chose this line, it's the macro funnel, plus you had another funnel on that convex inverted on the downside. So this is a key level of significance. You often get sucked to those. In other words, there's vacant low volume periods here that can sometimes see you accelerate through that. So will you get a little wind up, push up, or is it the beginning of the progress decay? That's it, target made, done, and you're going to start drifting off. That's my take on the Euro USD. I will look to reinstitute short positions from the green line here on any breakup and final rise. If it doesn't come and fill me there, I'll observe what happens here. If we get inverted HVF structure forming here on a grind line, for example, I may trade it from here to the short side and cancel those limit sell orders that were not filled. Let's just pull that piece of price behavior across so that you can see there was those lows. You can see that which was a low, and then you got your pump and you got your little bit of funneling here back in to give you that convex inverted structure. That might be one of the reasons why you're stalling here, apart from the fact that you've made a key target. So this is a stall period, not a time to chase long on the Euro USD. Potentially a time for shorts, but always optimize your entry. So ask for better, see if it'll give it to you. Other than that, that's my take. By the way, it's not on macro. If we just go back to the macro, the head and shoulders targets are all clustered down here. These things don't happen overnight. So that's from the left shoulder. This is from the right shoulder target, and this is the general head and shoulders structure. That's actually the right shoulder. That's from the general head and shoulders structure neckline. Using HVF method, you can learn also more about that on a course. Free webinar, by the way, September the 4th. And join us at 19:30, and that is currently BST time, British Summer Time. So that's UTC +1. So 106 is the largest, most aggressive downside, but as I've mentioned, we could churn for a bit. We're in between a lot of key levels here. The euro trying to take some delight about being back above 115. The overall structure of this is a shadow over the eurozone. At what point are we incorrect and we invalidate our bearishness? There must always be a level. You aren't going to win 100% of your trades. Your views aren't going to be 100% accurate, although you have the balance of probability in your favor. The running of this red line over here at the 117.54 would be a serious invalidation of this inverted structure for that time frame, and would signal potentially the end of further downside. So whilst we remain dominantly bearish and looking to sell at these green line levels and anywhere in the first half of this funnel for downside targets, the invalidation point would be at the red level over there. Okay, I'm Francis. See you on the webinar. It doesn't suit everybody to trade Forex or cryptos or anything else. Leverage hurts, it bites. You're going to need to personally develop as well as a person, as a trader. You need to own your outcomes. However, the rewards and the lifestyle can be great for those for whom it suits. Okay, hope you enjoy it. Please share and rate, and speak to you again soon. Bye for now.